You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That music means it is time once again for the blockiest of options shows. It's time for the option block. My name is Mark Longo from the old OptionsInsider.com. Feeling much better. Thank you. It was a rough start to the week, but I'm finally feeling my oats again. My recommendation to all of you out there is don't get whatever's going around right now. This seasonal one seems pretty nasty, pretty virulent. It likes to linger, likes to hang around and then come back many days later. So when you think you're done with it, you're not. So, wash your hands. Stay clear of this one, if at all possible. And, of course, you guys know how, if you want to maybe pass some time in the old flu season, listening to us, good way to do that. You, of course, can get us live every Monday and Thursday, noon Central, 1 p.m. Eastern, or grab the podcast wherever your finer podcasts are purveyed. If you like what you listen to, we won't hold it against you if you want to go put a review in for it. If not, we don't hold it against you either. Just enjoy listening and have fun. And however you listen, make sure you hit us up. Questions, comments, insights. We do indeed enjoy hearing from you guys out there. And joining me on the old program today, let's go out. Let's see if it's a hot zone out there. You know, one way to escape plague and pestilence is to go out there to the hinterlands of civilization, where hopefully you can be outside the radius of such things. And let's see if the Rock Lobster has done just that. Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, are you outside the hot zone, sir?
Outside the hot zone. You know, it just came to my mind about the hot zone is in northern Maine, there's like 20 feet of snow, but we got a lot of rain this year. It just was not quite cold enough for us to get the snow but we had a lot of precipitation. But it seems to me that you seem to get these illnesses right after you travel to a sunny climate where there's tall, frosty beverages available at a moment's notice. Is there a correlation that I'm missing there?
So you think it's just weeks of alcohol poisoning afterwards? I just go for a full frat party when I go south.
And I think really your body just goes on shutdown on the airplane. You know, a couple sick people cough on you. You just can't handle it. Can't handle the travel. Can't handle the party.
I don't know.
That's what I'm thinking.
Going to the warm weather does seem to do me, and not just me. My entire family got it this time. So it was a quality one this time around. I encourage you to get out of your hot zone free environment and sample some of the finer diseases that we're enjoying here in civilization, sir. And heading out there to civilization adjacent, a little town called St. Charles. Uncle Mike, sir, how go things? I know you have no disease out there because it's paradise on earth. How are things in St. Charles, sir?
Pretty healthy right now, so all is well. Happy to be here, and no sickness here, so that's a good thing, and all is well.
There you go. All is well, so let's keep on rolling with the show right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the old block of trading, and let's check it out. It was kind of a mostly slightly red day, I should say, on the street today. Most of the major indices off slightly as we're coming into the showtime here. It's like NASDAQ catching a bit of a lift, up slightly, up about not half a percent, up about not even 0.1%, but up slightly, ever so slightly on the day. Still a little flu-addled, as you could tell, listeners. Not entirely out of it, about 78% out of it, let's say. S&P off slightly, but within the realm of pretty much not even off 0.1%. And the Dow off a little bit north of 0.1% to the downside. So one of those kind of weird, mixed, kind of wishy-washy days. A lot of weird macro stuff going on. Of course, we had the abrupt end to the North Korea summit there where Trump walking out saying, they wanted an end to all sanctions, and we're not doing that, so he was out. So a lot of surprising, bizarre macro developments on the radar there. We also saw some interesting, GDP numbers coming out this morning, which will weigh on gold, and we'll get to that, of course, a bit in TWIFO coming up later today. In terms of earnings, on the earnings front this week, not a ton going on earnings. If you're into all things pop culture collectibles, Funko, after the bell, there may be a few Funkos around this studio right now that I'm looking at. Maybe more than a few. So maybe I'm partly responsible for why that stock has had a decent run. I don't know where it is right now. Let's pull it up because everyone's favorite Funko, FNKO, in case you're wondering, listeners, is the ticker symbol for Funko. They're at 20.5 right now, up about 30 cents or so, about 1.5%. So this one's kind of had an interesting run. They popped last year about 28. They're off that now. So they sold off when everyone else still down to about 11. So they've nearly doubled from their around Christmas Eve low. So they've had a good run of late as well. We'll see how the earnings are looking. TD Ameritrade was before the bell this morning. So there still are some names popping off, but a lot of the big names have already come out here. So let's go around the horn. Oh, before we do that, actually, let's do a little check-in on everyone's favorite volatility index, aka the VIX, about 14.5 right now. It's kind of vacillating a little bit. Got up as high as about 15 today, a little bit north of 15, then the old VIX cash, and then right back down now to about 14.5, off about 20 odds, 0.2 or so. I almost said 20 odd cents. You could tell how fever addled I still may be when I'm quoting cents around VIX. Mr. Rock Lobster, save me from myself, sir. What's in your neck of the woods today?
I will save you from yourself. Neck of the woods is, you got 14.5 vol. We were doing this in my vol newsletter live class last night. You got 15.5 future March, 14.5 VIX, 30 days out. You got realized vol is, wait for it, 9%. We haven't had that in months, like 7 months, 6 months maybe. It's been a long time since the SPX just really isn't doing much. And they are not letting VIX drop. They're not letting VIX drop probably because, you've got Cohen testimony, you got North Korea all of a sudden dropping the ball or not dropping the ball, trade war, $250 million, billion tariffs. I feel like the guy in that Mike Myers thing. What was that guy's name? I can't. Austin Powers. It was escaping me. It's like so long ago I couldn't remember. $5 billion, $1 million. Now it's $250 billion, and the White House took that off the table. And I'm just thinking that the market hasn't exactly bought it just yet. Has not bought that just yet. That's what I'm thinking. When they buy it, I think VIX will be 12 again. But they're just not buying it yet. I don't know if the White House will change their mind. But VIX says they haven't changed their mind. That's what I think as long as VIX is hanging in the 14 to 15 range with 9% realized vol, the market just is not pricing. It's not pricing movement, which normally is what it's supposed to do, and it's pricing something else, and it's pricing this trade deal getting done. Everybody, I think the president needs a win. I think the Chinese need a win. North Korea was not a win. Maybe the Chinese scuttled the North Korean things to put a little pressure on their bigger deal, a much bigger deal than North Korea. So I just think there's all these little, I think these, all these global things working their way out. If Alex would hear, I don't even know if we could say macro because this is more geopolitical. Geopolitical is the thing that I think moves VIX the fastest and quickest because, as an old trader, that's what would move the vol. When you heap a bunch of uncertainty on the market, vol blows up. And nobody can confuse everybody like a politician can, especially some of the current ones we have. So I think that's why VIX is where it is. And it would be interesting. I think that 13.5 is probably a near-term low until we get some trade news. So the vol market is not what I would say relaxed yet. There's still like a little tinge of doubt. So I'll say a little tinge of doubt.
Tinge of doubt. I like that. Look at you. Someone's been reading some Clancy novels here. The Chinese scuttled the North Korean trade talks. You're getting a little geopolitical on me in your crazy Maine isolationism.
I did. I read the whole weekend. I read I binge watched everything on Netflix that was Tom Clancy just to get myself ready for this whole thing.
Just to get in the mood for a little geopolitical risk.
Yep, Alec Baldwin fan. What can I say?
Now he's got to worry about some rogue nukes and some other a rogue submarine or two, some crazy Ivans, and you're good to go there on the Tom Clancy oeuvre. Mr. Uncle Mike, sir, in addition to binge watching and reading all things Clancy, what else is catching your eye today, sir?
Very unique. I think Andrew summed it up pretty well in terms of what's going on. I think we have North Korea and China. I mean, I've been banging this drum now for a couple months here on the show. I think that that's one of the big things that's driving the market at this stage. I think that in terms of what I'm looking at, what's actually lighting up my tape at this point in time, like you had mentioned a little bit when we were starting the show off, precious metals. Silver's had quite a run up lately, and it is down a couple percent since its peak about a week ago. Was up to around the 15 level, and I'm speaking of SLV, of course. It's pulled back a little bit. So looking at that, and then in terms of just looking at the market itself, we're in paint dry mode at this stage for the last week and a half. We've just been in the high 2700s on the S&P, 270s on SPY, have not been able to break through the 280 level or the 2800 level. So I think that we need one of these geopolitical events or macro, whatever way you want to classify it, to give the market a reason to actually go above the 2800 level on the S&P. The other point of note is I was looking at just a chart of the S&P over the course of the last year recently, and 2800 has been a tough level to get through. If you look at a chart of it over the last year, I believe we have tested it and have failed to break through it on, I think it was 5 or 6 occasions in the last year. And we did break through it, of course, for a little while last year. But mostly 2800 has been very tough to break through. So I think not only do we have a lot of geopolitical events going on right now, but also I think this is just 2800 for whatever reason. The market has decided to pick this as one of those key numbers.
It is indeed a key number. Speaking of some key numbers, let's see what else is lighting up our numerical tape here. Coming into showtime, looking at what was most active out there, we had VIX right around 140,000 contracts, so well shy of the ADV, which is about 476,000 contracts right now. SPY had about 800,000 contracts on the tape, so about a third of their ADV, which is about 2.4 million out there. The S, a little bit shy of 500,000 contracts. That ADV is about 1.1 million contracts out there. The Q is about 343,000 contracts on the tape with ADV about 646, so a little bit more than half of that. And then we got about IWM was pretty light as well out there in Russia, only 75,000 contracts with about 330,000 in the ADV. Excuse me, in terms of what's lighting it up out there today on the equity options, the most actives. Number 10, let's start at the bottom of the list instead of the top. Let's go to number 10, BMY. This is Bristol Myers, of course, with about 100,000 contracts even, taking the number 10 spot. Number 9, Bank of America, 108,000. Number 8, some of our old weird friends are making their return again, including NEO. This is an ADR, ticker symbol NIO. They have 120,000 contracts on the tape. Number 8, what is that? Actually 7. What is that? CELG, I believe, out there. Yeah, CELG, number 7, 183,000. Number 6, good old Tesla, $1.86 on the tape. Number 5, Apple, all the way down number 5 with 188,000. Number 4, Lilly, 197,000 contracts on the tape. Number 3, Square, 210,000. So Square lighting it up. Number 2, good old JD, another one of these names that we were just talking about on the last show. This is JD.com, one of these Chinese e-commerce sites. Nearly 250,000 contracts on the tape. And number 1 by a country mile. Going to get into some of that paper in a little bit in the odd block, but just freaking blowing the doors off everything else is GE. 920,000 contracts on the tape. A lot of it crazy nonsense, and we're going to get to it in a bit in the old odd block. By the way, if you're wondering, is there a bias to one way? Yeah, 90% of that paper in GE, 90% of that 920,000 on the put side, only 10% on the call. So that should give you some idea of, excuse me, just how much crazy nonsense was lighting up the old tape out there. Speaking of other numbers, let's see. We do have some other earnings results getting crunched for you, courtesy of our friends over there at ORATS. You can find them all, theoptionsinsider.com. Last night after the bell, we had Hewlett Packard popping off. They closed at $23.85. They were pricing in about $1.07, so they weren't pricing in a big move. They delivered a lot more than that, nearly $4 to the downside, so nearly 4x outperforming their straddle to the downside. Coming into this report, they were at about $20 even. Let's see where they are now, coming partway through the show here. They are 19.5, so off another half a buck or so. So pretty big sell-off in Hewlett Packard. Clearly the market not liking what they're saying out there. Our old friend we were just talking about as well, JD, also making the list. They were popping off before the bell this morning, and they closed, coming into the report, about a little bit shy of 26, 25.97. They were pricing in $1.61, and they actually delivered about $1.40. So pretty much in line with their straddle out there. So not a lot of surprises going on out there in JD. Let's see, any other names resonating for us here on the list. You guys can, of course, find the full earnings move and earnings move results reports for yourself, theoptionsinsider.com. Just search for ORATS if you can't find them, ORATS, in the search bar. That'll get you done there as this segment is done, and we keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get funky. And it's not let's talk to Andrew, no. Let's get weird with some paper instead, in terms of the odd block. I can hear him taking umbrage already there, silently, thankfully. Let's kick things off on the odd block. Our eye of Sauron, always watching, always scanning. And our first stop on the odd block today, Dell, good old Dell Computer. Dell Technologies Inc. they call themselves now. No longer Dell Computer. That's the old days. Now they're Dell Technologies. And let's see what's going on out there. Dell right now, about 56 1/4, pretty much almost exactly unched on the day. This is the name that's kind of had an interesting run. A year ago, they were trading $42, and they've kind of been on an upward swing ever since. It's been a quiet move, but a decent move. And right now, pretty much right on the upper end of that range. So well north of where they were a year ago, about 14 handle rally over the course of the last year. Not a bad run here for Dell. Let's see what our paper is telling us today. Dell, what lit it up today? 10,000 even. 10,000 of the July 62 half calls going up for 235. These are lifting the offer here. They were 220 at 235 when this trade went up. This is opening paper, like I mentioned, 10,000 of them. So lifting the offer on 10,000 July 62 halves for 235. This goes out to July, so there's going to be probably at least one earnings cycle in this name. I don't have the exact date for when they're coming out, but there's going to be probably some earnings between now and good old July here. So yeah, lifting the offer, Mr. Rock Lobster, kind of some old school odd block paper. Haven't seen these in a while. Is coming in, liking themselves some calls. I guess looking at the run up that Dell's been on, it's still pretty aggressive. This thing's got to move quite a bit, another 6 handles and change, plus the $2 he paid for the calls in order for these bad boys to. He's got to do it by July. What do you think of these, sir?
Didn't Dell get taken out at like $10 a share? Do you remember the buyout?
One of the many times that he like took it private, one of those kind of things, private, public, all that kind of nonsense.
Yeah, I think they did pretty well on that one. They took it. So obviously there's a market cap difference about a number of shares outstanding and stuff. It just, I mean, at first blush, it seems like they did pretty well. I always found it interesting that the founder of the company who owns the most stock, but he doesn't own all of it, decides to take the whole thing public, and all the shareholders are like, yeah, that's going to work for us in the long term. I don't know. I sometimes that it's a little shenanigan-y to me. I think, it's not going to surprise me. Vol is lower. Option premiums are lower. The economy, even with the shutdown, probably not going to do too bad with the threat of the shutdown or whatever. Everybody was predicting doom and gloom for the GDP number. It wasn't that bad. So all I can say is would not surprise me if Mr. Tusa put on his bullish hat. But, a reasonable call purchase for the time. Again, buying longer-term calls makes more sense generally because you got more time to actually for those things to make money. So I think it's a better idea than buying it next week. That's for sure.
I'm looking here at the numbers, and yeah, when Michael Dell took it public or private again in, I think it was around 2012, they bought it. Him and Silver Lake Partners bought it out for $25 billion, and it was a rough time for Dell. Their earnings were down kind of across the board, and when they went now obviously they're back public again. 2018, they returned to the public sector, and they were worth at the time an estimated $75 billion. So a little 3x return, not bad for 5 years worth of work. They had some acquisitions over that time with EMC and others too. But you're right, it has been an interesting turnaround. They don't list here the exact price that he bought it back in. But there was a lot of debt at that time too. There was a ton of debt on top of that share price that he paid. So yeah, they had some mountains to climb to get Dell back to profitability. It sounds like they're doing all right, and it sounds like this trader here is on board the Dell train right now, liking himself some upside. What do you think about Dell upside right now? You like this? Maybe you like some verticals instead? Maybe you don't like Dell at all. Let us know. Instead, let's keep on rolling. Another tech name lighting up our tape today. I haven't talked about this one in a while. Good old Fitbit. Man, how the mighty have fallen here in Fitbit, from being just the darling of the tech space, kind of just show the perils of there's first mover advantage, but also there's a peril to being first mover, is that everyone and their mother, if you have something good, you have a better mousetrap, everyone and their mother is going to steal it. And when Fitbit first came out years ago and they were doing the tech crunches and those events and winning awards there, and they had this cool little wearable that you wore at night and you wore it during the day, and what a cool idea. And now everyone and their mother's got one, including Apple. And how the mighty have fallen. But still, they had a decent year. A year ago, they were actually a buck shy of where they are right now. They're trading about $6 right now, $5.97. They're off today, off about $1, so not so great today. But a year ago, they were trading about $4.78. Then they spiked to a high of about close to $7.80 back in June of last year. Then they kind of vacillated to the downside again, back to $4 back in October, before spiking again up to $6. So they had a volatile year last year. Spiking back up when the market was selling off in late October, early November, which is kind of interesting. And then selling off again when everyone else did, down to Christmas Eve, another low of 462, before rallying now up to 6 and change, before selling off again today. An interesting run here for Fitbit. What saw our love today? What got us interested today? Some below the bid calls in Fitbit to the tune of the May 6s. So pretty much now at the money calls, going up 5,446 times for 58 cents. Not quite crushing the bid, going below it. They were 59 cents at 63. They went up all of them for 58 cents. So someone sounded like he wanted to get done and didn't care if he went through. They're not marked as late or anything like that. They're just below the bid. Doing opening. This is all opening paper as well over there. Looks like on the box. So Mr. Rock Lobster, someone coming in and I guess deciding to overwrite some at the money Fitbit calls all the way out to May for 60 cents. You know, we've talked before about some interesting choices, giving up all your upside for the near future for a decent amount. This is roughly 10% here. What do you feel about these going out to May, sir?
I think any buy right that will generate much better than market returns for a period of time is never a bad, terrible idea. You get 10% to May. If you want to hold Fitbit, it's one of those stocks where, it kind of reminds me of like GoPro. You have this kind of cool, appliance, and it's connected to the web. So it's got Bluetooth and it does cool stuff. But then again, then your iPhone's going to do it in like a week or something. It's one of those things where there's probably a business for it. It's just, unless they invent new stuff that's cool, it's going to be a tough business. So I think this kind of makes a good buy right candidate, actually, just because it's probably not going away, because people like a lot of people that like Fitbits like their Fitbits. But it's also, not going back to $25 anytime soon, unless some magic happens. So worst comes to worst, you make your 10%, who's complaining about making money?
Yeah, it's a rough segment because they pioneered it. They're like the TiVo and everything else. They pioneered a segment, and now you search for a Fitbit. And they try to command a premium for those bands, around $100, if not more, for some of their smartwatches and things. And yet you type Fitbit into Amazon or any other store, and you get legions of Chinese knockoffs for $20, if not less. And they do most of the same things. So it's a hard sell. You got to really be brand loyal. And then, of course, on the higher end, you got Apple stealing all their thunder. Not so much on the Android Wear OS side, that kind of side of the space. Aside from me, I like my Wear. Actually, I like my Galaxy Watch, but I'm a weirdo in that sense. Not a lot of love, I know, for the Wear OS and the Galaxy stuff compared to the Apple. If you just want a basic fitness tracker and step tracker and some basic sleep tracking functionality, you can go get that on Amazon right now for like $20-$25. So it's a hard sell to have to spend 3x, 4x more of that than that for a Fitbit, unless you really want that and you want the app. And the apps, again, that's the thing with the other devices fall apart. Obviously, the software functionality, not really. Is it worth paying 4x for an app? I don't know. That's probably why the stock is down where it is right now. But interesting stuff. And you're right, it's kind of hard to get mad at this guy. He's getting 10% out to May. He's given up his upside between now and May. Maybe he's getting 10%, so he's not like he's getting a slap in the face. Let's see if our final friend, Mr. Rock Lobster, will merit such same consideration. It's funny. GE came on our radar, Mr. Rock Lobster, for our scans, but our scans actually returned this. They returned, about 5,000 of the SEP 12 calls going up in GE today for 67 cents. And I said, wait a minute. I think there's a lot more paper going up in GE than that. And there is. to the tune of a whole bunch of crazy. We talked to the top of the show, listeners. There was, about 900,000 contracts going up in GE as of the start of the show. And 90% of it was in the puts. Well, yeah, that's where all this fun came in. So we're going to ignore those SEP 12 calls for a minute, even though they are interesting. And instead go to the March 9th puts. These are the March 8th. These are the weeklies. They're not even standard March, which makes them interesting as well. 203,100 of those going up for 2 cents above the offer. Excuse me. And then we have the March 7 puts. These went up as a spread. But I don't know if I would wait. I don't know if he's selling one of these. We'll see. The 203,100 as well of the March 7 puts for a penny. And so that's on the offer. So maybe a bit of a stupid, a two-saw size stupid here. And that's not enough. Also doing 135,000 of the March 7.5 puts for a penny. That's a spread against March 9.5 puts for 8 cents. That came up later. This is about a little bit later or a little bit earlier. Actually, about around the same time, about 40 seconds later. So 135,000 of that March 9.5, 7.5 spread, that went up 135,000 times. Looks like for 7 cents. So he may have bought that one. Just a ton of put paper here, Mr. Rock Lobster. So a 9-7 spread and or perhaps a stupid. And then a 9.5, 7.5 spread as well. And let's see, GE right now at about $10.37, off about half a buck, or about nearly 5%. This thing has been, as we talked about, has been very tumultuous, has been lighting up the options world for quite a while, ever since they've been announcing some crazy corporate actions going on over there. A year ago, it was trading about 14.5. It spiked up over that period to not quite 16, but close to it back in March of last year, and then close to it again in May. And then it kind of just has been slowing off. And then, of course, all the news started breaking last October or so, and that's when it started really selling off. Got down to its nadir of shy of $7 down on mid-December before rallying now up to where it is now, right around 10.5. Mr. Rock Lobster, just a put palooza by any definition out here. What do you make of all this put madness here in GE, sir? You think they're doing spreads, or are they just gobbling up stupids?
This one is, there are some times when I see this paper and I have to admit I am confused. I know I don't know everything about options, but I know something about options. And when I can't figure out remotely what the intent is of the trade, it is a little bit boggling. That's why I kind of like looking at this stuff. My closet thing is Warren Buffett buys GE as his kind of crowning glory, right? Although he's not seeing anything that he likes, which of course he could also be saying, yeah, well, he very much sees something he likes. He wants to just go out saying, I just bought, the first real industrial corporation in America. I'm going to put the feather in my hat. I'm on like 88 or 90 or whatever. And, so that is my closet theory. I have absolutely no justification for it at all. But every time I see like 200,000 puts go up in it at really weird prices, you're looking at this spread. Okay, they're going up. Looks, kind of like outside the mark. 8 cents. It's okay. So somebody's buying those puts. Why? I can't quite figure it out. It might have been a roll. I had to look at the open interest on the 01s. Actually, that's a little bit of my due diligence before the show, but I got tied up. Where I thought some of those puts could be a roll. And let's see. March 4. I know there's just not a ton of open there. Let's see, because I know there was a ton. Yeah, there's not. I'm not seeing that crazy open interest to justify this. So, your guess is as good as mine here. The only thing I can think of is somebody is taking an aggressive posture with the stock. The stock could go back to 9.5 pretty easy, and then they're looking for a simple home run. I have to say, because are they crossing it at 8 and the customer's selling and they're giving, and they're the long side, I don't know who's doing it, but maybe Susquehanna's taking the other side. They're giving the customer like a couple pennies and they're buying these and they're just buying a crap load of stock. that certainly could be something they're due. They're pretty smart that way. So I look at this, and all I know is I think GE options, I've had a strategy that's worked pretty well in here where I buy strangles in the back month, and I buy vertical ratio put spreads in the front. So I'm trying to generate consistent positive decay against a long strangle. And I just think the volatility in the 30s in GE is very underpriced because it's become like crazy town for a stock. It's not moving. It's not moving how a normal industrial company does because there's all this stuff going on. So the strategy has worked out really well. But right now I look at this and I cannot figure it out. All I know is it makes me happy with the strategy I have. So I'm not going to change it because there's all these shenanigans going on with these puts. So it's a little bit bizarre land.
It's a lot of corporate shenanigans going on. That is definitely the way. This has Tucson written all over. He likes himself a stupid. So maybe he's a foot out here. This is a little small size for him, but you never know. St. Charles, it could be a slow day for them, and they decide to just put on some small size out there in the land of St. Charles. Worth noting, it is opening on the 7.5 and the 9.5. That spread is opening on both legs. The other two, I don't believe so. So, yeah, it's so weird now because so much weird paper has gone up in GE already that this just adds to it, which kind of shows you maybe why our scanner just kicked back only the calls because these puts are nonsense. Don't even pay attention to these because it's so much craziness out here. But yeah, that's certainly something to keep an eye on, listeners. GE, who'd have guessed it at the last year that GE would become a stalwart in the option space, delivering weirdness, corporate actions, and volatility and option paper all of a sudden. They're not usually a candidate for such things. So interesting stuff going on. Let's see if you guys can keep the interesting trend alive with a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's do this thing. The mail block, your questions, your comments, your insights, your pearls of wisdom. Every now and then we pick your brains as well. Like we did this week, we thought we'd keep it simple. It's a bit of a flu-addled week over here as this contagion just rips through our offices here. So we would keep it simple this week to wind down the week. We thought we'd ask you, very simply, what are you guys up to out there right now? What's your go-to options strategery right now? I gave you a bunch of different choices. Obviously, if you don't see yours, write in with your suggestions. This went live a little bit before showtime, so it's still pretty fresh. I gave you just a handful of very basic choices, your long calls or your long puts or verticals in either direction. We don't judge. We just want to see what you're up to. Short calls or puts or verticals. Then we gave you the flies, so kind of all this fly-related stuff, so iron flies. I even threw condors in there, so flies, iron flies, or condors. Or you're getting out a little funky with some calendars and diagonals. And so we gave you a lot of different categories in which to play. Let's start with Mr. Uncle Mike. I know he's been busy slinging some stupids in GE. Mr. Uncle Mike, aside from doing that, do you have any thoughts on our choices here? And more importantly, what do you think our audience is voting for?
I think that the stupids on GE, I can't get enough of those. But I think in general, I'm going to go with spread and spread. I think that verticals and verticals is what people are leaning to right now. And that's what I'm going to go for.
Long or short verticals, sir?
I'm sorry, long verticals.
Long verticals. Okay. One vote for long verticals. Mr. Rock Lobster, if you've recovered from the madness that is GE Put Palooza, and you have a thought as to which way our audience is leaning, have at it, sir.
I'm more of the long. I'm at the long call, long put, long vertical stage right now. That's the audience. I think the audience is getting bullish, so I'm going to go long, the top one.
Oh, both of you leaning in the same direction for some long primo. Don Schlesinger, cover your ears if you're listening, because
he's crying. I heard him.
He'd be deeply offended. It's such a crazy recommendation. And right now, actually, again, it just went live before showtime, so this will probably change. But it's a bit of a tie between calendars and diagonals at number one with 34%. kind of surprising. And
That's
then
what we know.
number 2, right behind it, with 33% for flies, iron flies, and condors. So our audience is playing in the funky end of the spectrum as opposed to the shallow end of the pool that you guys are playing in. Only 22% saying they want to go long some calls or verticals or puts, and only 11% saying they want to sell some premium. So no joy there. So yeah, our audience is getting funky. Interesting. I like it. Keep the funk alive here. People chining in on this, including Jack's Bemused. He says he wants to go long calls in the 3rd year of a presidency with a pro-business administration. So there you go. He's liking what he's seeing from the administration here, and he likes, and he wants to buy himself some calls. So there you go. He's part of the 22% that you guys are part of, it sounds like, as well. Maybe for different reasons, but he wants himself some calls. Ben K, he wants to know, you guys were talking about getting your short SPY calls called away on a recent episode. Yeah, I think that was as some guy wrote in with his chances of getting his stuff called away on like a Thursday. It was a very specific, weird question. Let's see, Ben K goes on to write, is that something that occurs often, and should I be concerned about it? All right, well, we touched on this when that other listener wrote in. Mr. Rock Lobster, or Uncle Mike, whoever wants to, I'll let you guys decide who wants to walk Ben K through the dividend schedule of SPY and when and or why you should be intrigued and or concerned about your short calls during those periods.
Well, I could let Tucson do it, but usually it's 4 times a year. It is the day before the quarterly cycle. So that was the old index, like the ordinary cycle. That's the March, June, Sep D cycle. And because it's the same as the future cycle for the SPX or for the ES. What you have to worry about is, it's the day before XD, not the day of. It's too late. Is those in the money calls? It has to be in the money for SPY because that's the only reason somebody would exercise those. And if the dividend is less than the put trading on the same strike, your chances of being assigned are like 99.9%. So that is the arithmetic. It won't change, and that's when you got to worry about it.
There you go. Anything to add, Mr. Uncle Mike, sir?
A couple things. In terms of the arithmetic, Andrew, nail on the head as usual. But this is something that it does happen, and it is very real, and you need to be aware of it. It's happened to me twice in the 15 years with which I've been trading, and it's very embarrassing and not fun to do. I think I even talked about it on the show a couple years ago when it did happen to me. Sometimes you just don't think about stuff like that, but it's one where you have to really pay attention to things. And so right now, seldom if ever do our calls in the money with my style of trading. Just sometimes, and I think what it was is I actually had like a call spread on top of SPY. I don't remember what it was exactly, but it is something that happens to people. But the thing I want to add to it is that if you wake up the next day and you see all those short shares in your account, yes, it happened to you. And if it does happen, you're going to get a margin call on it. But keep in mind, you have something called same-day substitution, meaning if you take care of it the same day, meaning you close out all the short shares, then there's not going to be any consequence to it in terms of like a margin penalty or a day trading restriction or anything like that. But the thing that you need to be aware of is that at some point, usually maybe about a month or so later, if it's SPY typically, on the dividend payment day, you're going to have whatever that dividend amount is deducted from your account, because you were short those shares on that specific day. So ultimately, you want to be aware of it. You got to pay attention and see what's going on, and really monitor your account closely, because it's not the end of the world by any means, but it's just quite a pain in the butt and an inconvenience if it does happen. Like I said, it's happened to me twice in 15 years, and you just got to keep your eye on it. But if it does happen to you, then you just got to recover from it. And it's not the worst thing in the world, but it's just a hassle. Don't let it happen to you if you can help it.
Can be a pain in the butt and a bit of a surprise if you didn't know it was coming. And then you open up your account that morning. Oh, wait, what the? That could be a confusing moment if you didn't know. The old SPY surprise. coming at you. Let's see here. Anonymous wants to know, how do we get our pre-market news, and do we get notified when news is breaking? That's kind of what we do, Anonymous, whatever your name is. I like it. We have our ears to the ground here. We are an options news source, after all. So yeah, we kind of do our own digging, and so we keep our ears to the ground there, sir. Do we get notified? No, we notify ourselves. We notify you guys. That's what we do. But thanks for the question into our secret sauce. That secret sauce has to remain secret. Let's see here. Whoa, this was I don't know if you heard this a week or so ago, Mr. Rock Lobster. I think it might have been on Ball Views. It might have been a couple weeks ago. We had your little friend there, your hetero life partner there, Mr. Meatball. He chimed in on it was a stiff VIX. He thought the VIX was trading very stiff, and so it got us to debating of a drink. What kind of a drink a stiff VIX would be? And so we put it out to our audience. We said, hey, what should we put in our new drink, the stiff VIX? And a bunch of people chimed in. Gave them 4 choices: vodka, champagne, gin, or red wine. And 55% of them chose vodka. Tie over number 2, 17% for champagne and gin. Only 11% chose red wine. I agree with you. I reason we put that in there, we even added this on as an addendum later. We said maybe we're crazy, but it seems like a VIX-themed drink should just be red. That makes sense. So maybe a splash of cranberry, maybe a little bit of grenadine. Maybe if VIX is moving crazy, then we add a dash of Red Bull, even though I know that's not really red, but it adds the excitement factor maybe you're looking for. A bunch of people chimed in. Alex Webster, he said tequila, Red Bull, and grenadine with with a Xanax rim around the glass. Perfectly captures the vol market and its traders. So there you go. I like that. Red Bull in the glass, and then tequila, and then Xanax around the outside of it. Don't make me laugh, Alex. See what you're doing to me here? Pete Yarborough says he agrees. Tequila is the most volatile of all liquors. So yeah, I don't know if you guys heard about that. Mr. Rock Lobster, do you have any thoughts on what should be in our stiff VIX drink? And do you agree with our friends here? Tequila, Red Bull, grenadine, and Xanax. That just cracks me up. I don't know why.
Oh, you know what?
It's like he had himself a stiff VIX.
I think he did. I think it may be one or too many.
I think the problem was I couldn't hit the mute button because I had a stiff VIX in each hand. And then I
there
realized,
we go.
as I just
there
say that's probably not the right thing to say.
That might be.
On,
is that the house drink of
family program?
Is that the house drink of Option Pit now?
So I personally, my drink in Chicago when I lived there was either a martini or Jack Daniels. So it would have to be, and you can't really combine those two. So I'm going to say a stiff VIX is a martini and then a shot of Jack right after. That's what I'm going to say.
Interesting. Mr. Uncle Mike, I know you're not a hard liquor guy, but any thoughts do you concur with us at least that it probably should be red, sir?
I think that makes sense. I think that, like I said, I'm not a hard liquor guy. I'll drink a beer now and then, but I'm not a hard liquor drinker. So I don't really have that much to offer in this area. But I do really like I think it really fits the idea of having tequila with the Xanax rim on it. That one made me laugh when I read that in the show notes earlier today. I have to admit.
That's a pretty funny one. I do like that because that does encapsulate. He's right. That encapsulates all of the bipolar nature, shall we say, of the volatility market in one glass, which is interesting. Speaking of interesting, let's see what's interesting to us as we keep on going around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Time to go around the block, the portion of the show where we look at, or I should say, we tell you what we're looking at for the rest of this week into the old weekend, what we're keeping an eye on. A lot of, I think, as Mr. Rock Lobster termed it before, you can't even really term them macro at this point. It's kind of beyond macro into the geopolitical realm, which is bordering on the old Clancy realm. In terms of earnings, tomorrow, not a heck of a Foot Locker. If you're excited about Foot Locker before the open on Friday, that one's coming out. Other than that, not a heck of a lot lighting it up tomorrow. After the bell, like I mentioned, we do have VMware today. We have Funko for all of your leading Funko Pop type events and earning Autodesk out there as well. So still a few names coming out. Workday, whatever that is. So a few interesting ones out there. Splunk. Everyone's waiting for a Splunk to come out after the bell. But not a ton of earnings. Let's start with Uncle Mike, sir. What do you keep an eye on for the rest of this week into the weekend?
Well, as much as I'd like to look at Splunk or Foot Locker, I can't say that I am, quite honestly. But 2,800, I think, is a really key number at this stage. I think that we need to either get to it or get away from it. I remember a few years back, 2,000 was like a magnet number for the S&P, and that it would go above it, it would go below it, but it really just seemed like it was sticking to the 2,000 mark. And it appears that 2,800 isn't necessarily what I would call a magnet as of yet, because it's just been below it. But I really am laser focused on this 2,800 mark at this point. Of course, watching the macro, or we should call it geopolitical news with China and Korea. But 2,800 is the key number that I am dead focused on.
Mr. Rock Lobster, same question for you, sir.
I'm not, what the heck is going on right now? I think we have to wait for all this news to play out. And that's it. I think the one thing is, I'm looking at, I think these trade things will be settled. I'm mostly looking at now, like things that have gotten slaughtered in this market or have not performed. Kind of maybe staying away from the FANG stocks. Because I think that big bloom is off the rose, at least for a while. Doesn't mean they're not going to go up a little bit, but I'm looking for other things like drug stocks and kind of more vanilla equities that the market has really ignored for a while. So looking at more of that kind of stuff, kind of like, say, value plays. But short term, I don't see a ton. Like the Fed took their foot off the gas pedal with interest rates. Washington is the same. I'd like to see, I would get much more bullish if they could do some real work with the deficit and actually get their heads out. So don't know when that's going to happen. But other than that, I think we're like Mike said, 2,800. It's our slidey around number. That's kind of what we're doing.
Our slidey around number. I love the technical terms, when we get technical here on the show. I know that's the part you guys love. Well, that music, unfortunately, listeners, means it's time to draw to a close this sojourn down the river options. But before we go, let's go back, check with each of our cohorts, see what they have cooking that may interest you. Let's start with you, Senior Uncle Mike in the land of St. Charles Surf. I'm interested in foxes and all that kind of good stuff. Where should I go? What should I do?
stcharleswealth.com. Foxes, investments, options. What more could a man need? The other thing to keep posted to the site for, I'll be sending out information out the next week or so, probably towards mid-March. We're going to have another St. Charles Investment Club meeting at the local office, 303 East Main in St. Charles, one evening. More information on that to come, still securing a date. But for anyone that's ever been to one of those investment meetings with options, it's a ton of fun, and it's one that you do not want to miss.
And he caters delicious Skippy's, gyros, and lemonade. What more can you ask from the man? stcharleswealth.com is the place to go. Click on the fox. It'll do amazing, wondrous things. Go click on it for yourself and find out. And Mr. Rock Lobster, if I want to go to a website and click on it and have it do wondrous things, where should I go from your neck of the woods, sir?
I think you should go to optionpit.com. Masterclass on how to trade longer-term options. If you like the stuff I say on this show, that's what our masterclass is about. 10 parts, and not only is the class great and you will learn a ton, I'm sure you'll learn enough to pay for the class easily. But Mr. Longo also could say that great phrase,
the masterclass.
There you go.
Still not entirely 100% from the flu, but the voice is getting there.
Coming back.
Hopefully that was at least passable. I love how you had to think for a minute what website to go to. Oh, where should they go? Oh, optionpit.com. Where should I possibly send someone? TomClancy.com. Check out their latest works. Check it out there, of course, listeners. Optionpit.com. That is the place to go for all that good stuff. Everything options mastery. That is the place to go. And if you don't want to go anywhere, you want to stay right here, you want a little bit more options in your ear holes, we got you covered. If you're listening live in about 30 minutes, as the Irish would say, we'll be back here with Twifo this week in futures options, talking all things crude, gold, equity vol, you name it. It's going to be on the show there. We'll get to it, break it down, talk skew, volume, all that good stuff in a little bit. If you're listening on the podcast version, just look to the next show. I'll be right there. And we'll see you back next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.